As you venture towards achieving the goal of buying a property, you will eventually come to a crossroad which will see you needing to pick a home loan. Now, it's very important to understand this process because picking the right one now, based on all of the loans that lenders and banks currently offer, could save you tens of thousands of dollars over the life of your loan. Welcome back to my channel. My name is Reese, and in today's short video, I'm going to be breaking down what a comparison rate is and giving a little bit of guidance as to what you should be looking out for when looking for a loan. Firstly, I just wanted to clear up that a comparison rate is not the same thing as a home loan interest rate. A home loan interest rate reflects the amount of interest that you will be charged by your bank or lender for the balance of your home loan each year. And the interest charged by your lender is broken up into your payment cycles throughout the year. So that could be weekly, fortnightly, or monthly. Personally, I pay fortnightly. That's how I decided to set up my loan. And that can then feed into different types of loans, whether it be variable, where you're seeing yourself pay principal and interest off the loan, or a interest only loan, where it's just the interest component based on what you owe. But that's for another video. The concept here is the comparison rate is very different to the home loan interest rate. Now, with that all cleared up, a comparison rate is designed to help you better understand what the overall costs for your loan each year will be when eventually taking out a loan. It doesn't only take into account the base interest rate of the loan, it also takes into account extra fees and charges which are associated with that particular loan, giving you a better representation of, let's call it, the percentage overall of what you're going to be paying on the loan that you decide to take out. These additional costs, which are factored into your comparison rate, include things like settlement fees, account fees, annual loan fees, and setup fees. Your settlement fees and your setup fees are generally going to be a one-off payment. Who cares, you might think, but still, these could be in the hundreds of dollars. Where you need to be a little bit more careful are things like your annual fees, your ongoing fees, and your account fees, where if you were to have 5 offset accounts, and you were paying $5 per account per month, think about how much money that could be over the course of 20 years. Same with your annual fees. I know someone who pays $370 every year just to have a home loan. Now that's a lot of money, again, over 20 years. You're talking about tens of thousands of dollars when you add it all up. And it's not an insignificant number. So understanding what you're looking at when you're comparing interest rates to comparison rates is really important. This makes the comparison rate a much better representation of what it's going to cost you to facilitate this loan every year for the entirety of the loan. Two competing lenders or banks might have similar home loan interest rates. Let's say they're both 3%, but when you look at the comparison rates, one might be a lot higher. One might be 4%. And you might think, oh, a percentage isn't that much. But again, I reiterate, over the course of a 20-year loan, that 1% will add up to be tens of thousands of dollars, especially when you're borrowing hundreds of thousands of dollars. The general home loan is well above $300,000 in Australia anyway. So just for perspective, use the comparison rate. Again, I reiterate, it's better and it trumps the home loan interest rate comparison. There are lots of online resources to assist you in finding the best comparison rate or the best home loan rate for you. You can either go to banks directly and just take the information directly from them, or there definitely will be websites which compare all of the current lenders and banks offers and will show you very quickly, just as a guide, which one's probably going to be the best one to go with at the time. There'll be other terms and conditions which you need to understand. Like I always say in my videos, do your research, do your own due diligence. However, these can be really good guides and Google will be your best friend in this instance. A comparison rate will show you the full picture about what you can expect to be paying annually based on the home loan you decide to take out. It can be tricky, so again, I reiterate, do your research, but definitely speak to banks, speak to lenders, and get the full picture before signing any contracts or jumping into anything, because this decision will alter you, alter your lifestyle, it will alter your finances for many years to come. So in summary, the home loan with the lowest interest rate may not always be the cheapest option. Use the comparison rate to get an accurate indication of what the total loan costs is actually going to be. Overall, I hope you enjoyed today's video and I hope you learned something new. If you did, please consider liking and subscribing, and as always, I will see you in the next one.